Cyprus, the mouse that roared, Russia, the Fed, and two stocks on the move. Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub, with your video market update for Wednesday the 20th of March. Well, we actually appeared on CNBC's Asia Cash Flow on Monday and discussed the Cyprus mouse that roared situation. You can watch it online, of course. Geographically, it's a very small country, Cyprus, and it only represents 0.5% of the GDP of the EU. However, the ramifications of what it did are enormous, and certainly they're enormous in Europe. The banks are closed right now in Cyprus. They open on Friday, and that's going to be the key telling factor if there's a bank run. So we'll watch those very, very carefully. So let's get started with the markets and the markets we track on MarketClub. Starting with the Dow. The Dow is all three green triangles are positive, good sign. Daily kicked in today. Ben Bernanke speaking at 2:30 today, so we'll get a better idea of what the Fed wants to do, which I expect will be zero, especially in light of what happened in Cyprus. So I think it's all straight ahead with that situation. Looking at the S&P 500, still have the daily down and the daily down on the NASDAQ, but the stocks are looking actually pretty good. If we close up here today, and I think when Bernanke speaks, if it's positive, we could actually make new highs on the day. So generally speaking, the trend is your friend, and the trend continues to be positive for the S&P 500 and the Dow and the NASDAQ. So let's go to our next market. That's going to be NASDAQ. You can see here it's actually to its best levels since we were here on Friday. But generally speaking, if we close, we're actually probably higher for the week. And if we close up here, if Ben Bernanke is positive, we'll get this to pop, and we'll probably see the daily triangle turn green as well. I'd be very surprised if he says anything that's going to disturb the market on a negative basis on the downside. So moving along to the spot gold, you can see spot gold's a little bit under pressure today. We haven't, as you know, we haven't been that enthusiastic about spot gold. A little bit of a divergence here on the Williams percent R indicator. Plus, you're right at the top of the Donchian trade channel. Not to say we can't go higher. We could see this market going to the 640, even the 1640, 1650 area, where it meets a trend line, which I think will be actually a very strong point. If we see all things considered, Cyprus comes down, the Fed comes in, then we could see gold come back down to the 1580 level again. So it's just a little bit, and the question is, what would you rather own? Gold, which pays no dividend right now, or stocks that actually pay a nice dividend and have some appreciation ahead of them, especially if if the Fed stays behind them. So let's go on to our next market. That's going to be the Eurodollar. Now, this is what we had yesterday. See the little red monthly trade triangle? That's a negative, indicating that the trend, the major trend for the euro, all three are down, saying the major trend is down. So we could see this market going lower now. And let's just scope this out just a little bit further, maybe a couple of years. And let's just take some of the tools that we use here. We've got our Donchian trade channels, take those off, and our parabolics. And we'll just put you can see the weekly kicked in really well, up close to the highs. And now we've sort of got this top here in place that could actually move this market quite a bit lower. It really depends on Cyprus and the banks on Friday. If that's the case, then you could see a run, which is going to have really psychological effects that's going to reverberate right the way through Europe. And so technically, we could see this market. I'm just going to draw a very straight trend line here that gives you an idea. If we just kind of muscle it along here like this, you can see it's really sort of stayed around those lines. So you could say from the 130 to the 137 level. Take that away from 130, takes you down to 123, which is back to where we were back in August of 2012. So not unheard of, but I think generally speaking, you've certainly broken the trend line here on the upside. I'm just going to draw this trend line real quickly. Boom, you see where the weekly kicked in through the trend line. These trade triangles are very, very important and very powerful. Don't underestimate them. And we may see a little bit more of a sideways market until Friday. Then I think Friday, if the disaster kicks in, this market may be a great weekend, 52-week low, great weekend play rather. But generally speaking, the trend is you should approach this market from the short side, selling any kind of rallies you see in this market. So moving on to our next market, this is crude oil. Crude oil's chopping around here, doesn't have any real strong direction. You sort of have mixed trends. You have the daily and the monthly positive, while the weekly is negative. So we're just sort of hovering around here. We may see a little bit more of a pullback. Certainly the momentum is not with this market right now, but let's just scope it in just a little bit. And last week we closed right here at, this is last Friday, we closed at 92.15. We're 92.41, so pretty much flat for the week. We've had some big moves, obviously $2 moves up and down a couple of times just in a short period of time. So I think we are still bullish on this market longer term. We just want to see the weekly trade triangle kick in and turn green. When that happens, we want to be all on board with this market. So moving along, this is the Hewlett-Packard. Now Hewlett-Packard's made some disastrous moves, and it's made some good moves. Good move was getting Meg Whitman, and you can see basically where our kick in on some of our weeklies kicked in very nicely, but the monthly kicked in right here, and that was on the February 22nd at 17.45. We're currently trading at 23.37, so it's almost $6 profit in there on a stock. That's almost a 30%, it is a 30% return in a very short period of time. So they're just voting today in the shareholders meeting whether to kick 5 directors off the board. I think if they were smart, they would do that. I think it'd be very positive for the stock, and it'll give Meg Whitman a chance to really get serious about turning this company around, which is once a leader in its field. So let's move on to our next market. This is Dean Foods. We had a buy signal on Dean Foods yesterday at 13.19. Excuse me, on the March 19th, excuse me, at 18.95, I beg your pardon. 18.75 currently. It looks like it's stalling out around the $19 market. You can see it's back here and back here and back here. It's sort of seen as sort of, it's a little bit toppy. I would say if we can get it closing over $19, it'd be a good psychological move for this stock. But the trend clearly on the upside. You want to be not shorting this market, but actually looking for a place to go long. New Mountain Finance came on our radar screen today as a major sell here at 14.20. It's 14.14 last, but the concern I have here is the volume. We very, very low volume, and then suddenly we have, whoa, a huge volume day, almost 3.5 million shares on a market that only trades. I would just avoid this stock for the time being. I just don't think there's anything to look at there. So anyway, that's our update for today. So be sure to tune in to Ben Bernanke at 2:30. He'll be making his quote-unquote analysis of the economy and the markets, and I think it's going to be much to do about nothing. It's going to stay the course, and I think stocks are going to go higher. So I'm Adam Hewison from Market Club.